Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, again, I want to wish everybody a great holiday weekend. And I'm so happy that you decided to join me. And of course, I have a commentary, kind of a bitch. Okay, you know, as you've been on some of my calls, you may know that I like to bitch a little bit. Okay, but again, you know, as you may or may not know, I do a lot of media contribution. I'm on all the time talking about markets, and nothing pisses me off more than when these pundits and these imbeciles talk about high frequency trading like they know what the hell they're talking about. Okay, now this is something that is really an irritant for me, and I think it should be for you as well, because they are misleading the entire industry on what happens with HFT, algorithm trading, all that stuff. First, let me explain that high frequency trading is not trying to catch the next bear market and make a gazillion dollars on the way down, or the next bull market and make a gazillion dollars on the way up. They're trading for fractions of a cent in small little spots. They're trading big quantities in small little spots, okay? But in the meantime, algorithm trading, high frequency trading actually replaced the market makers. For you, the retail trader, high frequency trading is the best thing that ever happened to you. It is the best thing that happened. Why? Because it reduced your cost of commission, okay? High frequency trading allowed markets to go from fractions, which did not make market makers happy, to decimals. So we went from a minimum size market of a 16th, which is 6.25 cents, to some markets are a penny wide. So that takes that's benefit to who? The public. Okay, Michael Lewis, who wrote his book, and that jackass who opened up that exchange, saying that, well, the big firms lost all this money. That's again a bunch of crap. It does not happen that way. So now you've got markets that are much more narrow, which means that you and me, the retail trader, the public trader, can now buy and be very competitive with those that are trading for a living on the floors or that are making markets throughout these electronic exchanges. Okay, so now it made the markets narrow and tighter. Then what did it do? It brought your commissions down. You know, I think we forget. I think the first electronic broker came out, maybe it was $9.95. Okay, now you're down, some places you're down under $3. Okay, so the high frequency trading brought together a much less expensive way to trade so that you and me could actually trade from our office, from our home, from wherever we wanted, because now the cost is not prohibitive. You know, remember, way back to buy 100 shares of stock might have cost you $200. So we see bid offer spreads narrowing. You know, when I first started trading in 1980, IBM's market was $1 wide from the bid and the offer. Now IBM's market's about 10 cents wide. So you tell me who benefits and how the high frequency algorithm trading hurts you there. But the biggest point of this is everybody wants to, you know, nobody said that when high frequency trading, when the market was going straight up, you didn't hear a complaint about high frequency trading. Does the high frequency traders or the algorithms only work when the markets go down? I don't think so. Okay, so again, now the reason that you get these huge down moves when the markets go down is not because of the algorithms, not because of the high frequency trading, but because everybody like you and me and all of us all have a way to execute. You know, we don't have to call our broker anymore to get that execution. We don't have to wait for the whole cycle to take place. We can execute instantaneously. So if people start to panic, if you start to panic, do you think you're the only one who's panicking? Well, guess what? 50,000 people hit that sell button at one time. What do you think is going to happen to the S&P? What do you think is going to happen to the Dow Future? What do you think is going to happen to the stock that everybody's panicking? It's going to collapse. It has nothing to do with the algorithm traders. They're sitting there trying to grind out the market, and they're just trying to squeeze out a little bit of the edge. Versus you've got 50,000, 100,000 people all at the same time panicking and puking, pushing markets down. That's where the big moves come from, not from the fancy algos. So please, pundits, get it right. HFT is the best thing that ever happened to the retail trader. It made the trading market fair for all of us, and it made it fair to bring us back in the game. In the meantime, thank you very much. This is Bubba's Bottom Line. I am Todd Bubba Horowitz. Everybody have a great weekend. Enjoy yourself. If you want a copy of that webinar I did on futures and hedging together, email me at bub@bubbatrain.com. And football. I've been really cold in football, but we're gonna continue to fight. Okay, we like, I don't know who we like tonight. We're gonna take the Minnesota Vikings just for a pizza and a beer. Have a great weekend. Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update. Thanks, everybody. We'll see you later.